and with me are Emily Gibbs.
The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon. I'm Craig McPhail from TMX Equicom, and with me are Emily Gibbs and Ross Marshall. Today we'd like to talk to you about IPO communications. Along with when a company is founded, makes its first sale, or becomes profitable, an initial public offering is one of the most significant milestones a company can achieve. Communicating well before, during, and after the IPO is one key to success. My colleagues and I have assisted hundreds of companies to go public, and while every situation is unique, common to all is that going public is a transformative process. A company, once it completes its IPO, is not just a formerly private company with more money. It's changed how management conducts itself, how the business is organized and measured, how you communicate to your customers and employees, and your company's profile in the community will be completely changed. The process you begin by launching your IPO won't end when the deal closes. It's just the beginning of the journey. Today, we're going to look at that journey in three distinct phases. First is the pre-IPO phase, where most of you are today. Here is where you set the stage for a successful roadshow. Next is the initial public offering itself, where you execute your roadshow plan. And then the post-IPO phase, where you build on the corporate profile and goodwill achieved on the road. Now, Ross and Emily will speak to you about the important stage of getting ready before your IPO.
Thanks, Craig. So in preparing for an IPO, we like to think of your company as a home. There are a great number of channels and a great deal of information publicly available on your company prior to the IPO. And each discrete interaction that happens between your company and a potential investor must be viewed as an opportunity to present the company in the best possible light. Whether those interactions take the form of a one-on-one meeting, a visit to the website, disseminating a press release, or someone picking up your product marketing brochure. Each of these interactions is like a view into your home. What you want to ensure in this pre-IPO stage is that no matter what perspective that potential investor looks at your home from, no matter which window or door they look through, that your house is immaculate, that your communications are professional, clear, and consistent. Investors are looking for a reason to say no. If the management team is extremely effective one-on-one, but the website looks like it was designed in 2001, with information that has been updated since August, then we have a problem. Emily is going to walk you through how to approach communications during this IPO stage.
Great. Thanks. So as Ross mentioned, this house metaphor, going public is like selling a house. The first thing you do when you get ready to sell is to clean up the exterior and stage the interior. It starts with a shift in thinking. No doubt you're experienced with marketing. That's why you're thinking about going public. You've been successful to date. But this is different. You're no longer selling the product. Your company is the product. It's a new marketing campaign, and with it comes a new audience. So with new means of communication, this new audience may not be as familiar with the industry. They may not know the jargon or the technology. It's really time now to get introspective and define your core investment proposition. So why would I invest? It's not easy. You have to condense it down to the basics. You've got to keep it short and keep it compelling. Then you've got to write it down. Why? Because writing it down makes it easier for the company to commit to one key message. The consistency of message is key. When investors, brokers, and analysts all hear the same message clearly articulated over time, they hear and see a focused company. It makes it easier for them to understand your story, and that makes it easier for them to make the decision to buy. So there are three key tips when creating a messaging framework. The first one, cut out the jargon. So speak plainly and use language everybody understands. Don't forget that investors aren't as familiar with your story as you are. The next one is be consistent. Make sure that the same messages are being used across the company. Review your data. Make sure that any evidence and proof you use to support your claims is accurate, and ensure that everyone's using the same data. And three, develop your market message. Distill it down to how do we compete, what your need expressed is, and what your need addressed is. Craft a 30 to 60-second elevator pitch and practice, practice, practice. So why? Well, going back to the house metaphor, it's essential that whenever, whatever window a potential buyer looks through, that every room in the house looks great. It's the same with your IPO communications. Different investors will use different touch points to learn about your company. Make sure that the messages in your promotional materials are in sync with everything else. Look professional, focused, and be in control. So, of all the windows into your company, really the most important is your website. It's the first place potential investors go to learn about your company. Investors use the web on a 24-hour basis to evaluate you. Make sure the messaging is complete and accurate and up to date. If your investors can't find the information they're looking for, they'll go elsewhere. And when they leave, you no longer control the message. You have an opportunity to make your corporate website the first place investors turn to for information. Become the trusted hub. Remember, website users are fussy. They don't like to have to look for the information. The average user spends 8 seconds looking for the right information. After that, if they can't find it, they're gone. So keep it simple and easy to navigate. And what are they looking for when they are there? Pre-IPO, make sure that you have a focused investor page with a corporate overview, links to management and board, key highlights, news and events, and any presentations you have. Don't worry if the information overlaps other pages of your website. Keep in mind that you'll need to add stock charts, reporting, and governance when you go public. So plan for tomorrow today. So here's the investor relations page from Bridgewater Systems. As you can see, it's clean, easy to navigate, and provides clear links to all relevant information at a glance. Also note the RSS feed icon. This allows shareholders the option of signing up to receive all your new press releases as they're posted. So I could go on and on about best practices in IR websites, but instead I will direct you to our partner Q4's excellent white paper on the issue. It's 80 pages on best practices, and it's an exhaustive resource. Also, the electronic disclosure guidelines available on the CICA website are another great resource.
Thanks, Emily. So at this stage, you've completed your messaging. It's concise, compelling, and populated throughout your existing public materials. So what's next? Well, another way we like to build visibility for the message is public relations and the use of media relations. Now, most companies at the pre-IPO stage will have some rudimentary PR function in place already. So in many cases, it's thinking about broadening or expanding that activity. But in some instances, when you visit the website of a company that has announced their intention to go public, I often only find 1 or 2 press releases per year. If you haven't already started to disclose materials like new contract or customer wins, new partnerships and product launches, you should start considering this pre-IPO. If you already have this level of disclosure, then consider broadening it to include more corporate-related events like governance issues, new board members, new senior officer hires, and the like. The reason why this is so important is if you already have an idea of going public, your disclosure practice pre-IPO sets a precedent for how you act during the IPO. Once you've entered the quiet period, it's just that, quiet, and it can last a long time. Your ability to disclose information is greatly restricted. However, in consultation with legal counsel, some credence is given to what your practice was pre-IPO for when you are in that quiet period. So in this case, the communication of factual information about the business that is released in a manner, timing, and form that's consistent with the regular past communication practices is allowed, as long as it doesn't specifically relate to the IPO or IPO marketing activities. So during this pre-IPO period, you also want to consider on what metrics you'd like to market the value of the business. It's useful to take the time at this pre-IPO stage to think about the metrics in terms of both financial and non-financial. We're all familiar with the general financial metrics of revenue, EBITDA, and adjusted EBITDA, and how they demonstrate the growth or consistency of your business over time. And once you become public, they're going to play a much larger role. But you should also consider evaluating a group of non-financial metrics. Make a long list and then narrow them down to 3 or 5 that will, over time, demonstrate how your business is growing. Depending on your business, these metrics can take different forms. For example, if your business is in the sale of large capital-intensive infrastructure products, we've seen clients successfully use order backlog as a great metric. What the metric is isn't so important as using it consistently and making sure that it demonstrates your tracking growth over time for the market. So you're finally, moving on, finally making the effort to initiate media outreach pre-IPO. Your market message is intact. Now go and use it. Reach out and start to build visibility with the media to raise awareness with the investment community before you go out and ask for that check. There was a great example of this in 2010 by a company named Smart Technologies out of Calgary. They were at a pre-IPO stage. They were obviously contacted or went out and proactively contacted the ROB magazine, which is a Globe and Mail supplement. And they were able to earn the cover of that magazine earlier in 2010. And that really set them up and positioned them, primed the market well for their IPO. But they did it far enough in advance that the two events were never linked. So everything we've talked about up till now is about that pre-IPO stage. What we're moving into is the IPO. And this is when you're in the thick of it. You form the syndicate, you've engaged legal counsel. What's next in terms of the communication? Well, there is a core group of key communication documents that you require for the IPO. And one is bigger and more expensive than any of the other, and it's the prospectus. It's an owner's task, and from my experience, every management team that goes through a prospectus drafting session is never the same afterwards. Your legal counsel and the underwriter's legal counsel have a critical role to play in this process, and they have your best interest at heart. It's to mitigate your risk post the selling process, as well as the risk of those people that do the buying. But the problem is that they want to make sure that the promises that you make are accurate and valid, and that the information you use is sourceable and verifiable. But the tough part of this task is that the prospectus is not a sales document. It's a disclosure document. And it's really there meant to mitigate your risk and the risk of investors. So what we believe is that as you work through that drafting session of prospectus, your messages will start to get muddled. They'll start to get, pushed in one direction or another by legal counsel and by others at the table, bankers, probably your own management team. What's critical at this stage is that you go back and use those core messages that you set up at the pre-IPO stage. You have to retain your focus. And if you successfully established your key messages and value proposition clearly, as Emily explained, the framework will pay off now. Now, Emily is going to address the video in a moment. One of the big parts of what we believe is an IPO is the presentation and delivery of that presentation. So you may ask, why is the presentation so important? Well, oftentimes we make the joke that no one ever reads the prospectus. While that may not be entirely true, it's certainly true when you go into that meeting with the PM. The only thing you have with you is yourself and the PowerPoint presentation. It's you, and when the portfolio manager sees the whites of your eyes, your delivery and how you tell your story through the supporting presentation that ultimately decides whether they invest or not. You have 45 minutes to sell this deal. Maybe they'll listen for 20 minutes before they start firing questions at you. So you have to capture their attention early. Make sure you communicate your need expressed, your need addressed, and your value proposition as cleanly as possible. If you want to be memorable, we've got 3 tips for your presentation. Give them the right information, rapidly transferred for the highest possible recall. What do I mean by this? Next slide. There are a lot of good things you can say about your company. You live and breathe it every day. You built it up to the point where you're able to go public, and that's great. But you can't say everything. If you try to say everything, you're going to say nothing, because the audience is only going to remember 3 or 4 things. You have to be disciplined up front and make choices about what you're going to put on the table. And usually this is the downfall, where people convince themselves that they can cram everything into the deck. If you'd like more information on powerful presentations, you can visit last month's webinar by Equicom, given by my colleague Mike Polonsky.